The Liberal government is making further concessions to small business owners even as a Senate study has concluded that Finance Minister Bill Morneau should scrap his controversial tax plan entirely. As members of Parliament bolted for the exits for a 6-week recess, Mr. Morneau stood in the House of Commons foyer to announce his latest revisions to tax changes he first proposed in July. The latest adjustments include new exemptions for certain family situations, but the minister is sticking with his plan to have the new rules take effect on January 1. Mr. Morneau said family businesses will have enough time to decide how they want to handle issues such as dividend payments to family members under the new rules, given that taxes for 2018 are not filed until 2019. Story continues below advertisement. They'll have 12 months to figure that out, he said. We think this is entirely appropriate and consistent with past practice. Finance Canada released a host of technical guidelines on Wednesday that outline how Ottawa will administer new rules aimed at restricting the use of income sprinkling by business owners and their families as a way of paying less tax. As expected, the rules outline how the government will decide whether or not income sprinkling by an owner to a family member is reasonable, based on criteria such as labor and financial contributions. However, the government also announced new situations in which family businesses could be entirely exempt from the new income sprinkling rules. The provisions include new exemptions for adult family members who work at least 20 hours a week for the business and for adults 25 and over who own 10% or more of a corporation that is not a professional corporation, such as a law firm or doctor's office. Another exemption applies to sprinkling income from an owner to a spouse in cases where the owner is 65 or older. That provision is meant to provide business owners with an option along the lines of pension income splitting that is available to other Canadians. That change was praised on Wednesday by the seniors advocacy group CARP. Conservative and NDP MPs said it was unfair of the government to announce further changes less than 3 weeks before they take effect with no opportunity for further parliamentary debate. The income sprinkling provisions were one of 3 main elements of a package of proposals related to incorporated small businesses that generated considerable controversy after they were first proposed in July. In October, Mr. Morneau announced that Ottawa would not be going ahead with one aspect, a plan to restrict the conversion of dividend income into lower taxed capital gains. The third element, a restriction on the use of an incorporated small business as a vehicle for making passive investments, is also going ahead with some changes. The minister announced revisions to that plan in October, including that it would exempt the first $50,000 a year in passive income, which is equivalent to a 5% return on $1 million in savings invested. Story continues below advertisement.